Hey everybody, Josh Sigurdson, a World Alternative Media here, and we're joined once again by Lior Gantz of Wealth Research Group. There's so much to go into in the world right now. There's a lot of panic. There's a lot of people talking what's next for global currencies, what's next for the markets. I mean, the markets are puking over the last month or so, and we haven't seen the S&P year to date perform the way it is right now since the beginning of World War II. There's a lot of panic in the markets, but these are often the best times to get in and really make some money, as a lot of people would say. In fact, Robert Kiyosaki recently called this the beginning of the biggest crash in history. But he also noted, as I just mentioned, it's actually a pretty good time to really start to try and understand what's going on and possibly make some money out of it and possibly get around the implications of a global collapse, which will affect absolutely every single one of you watching or listening right now. Lior, I wanted to start off by asking you a little bit about the most recent move to bring interest rates up. I mean, I can't imagine in a time of crisis, as we have seen lately, while the dollar is doing actually pretty well in the race to the bottom, the fact that interest rates would be pushed up at this point in time. I want you to try and clarify this for us and tell us what pushing interest rates up at this point in time really means going forward, and can they keep those interest rates up going over the next year or two?
So in 2021, the Fed delayed any action. It didn't raise rates, it didn't lower rates, it didn't stop buying bonds, and the idea was that they wanted to stall for either the free enterprise system to solve a lot of these supply chain problems, the zero COVID policies to go away, and for the economy to open up, and basically for to see some sort of a resumption of the same trends we saw before everything happened. Before everything happened, there was an economic boom under Trump. There was low unemployment, record low unemployment, more participation in the labor force, very muted inflation, and everything looked on the up and up. It was called Goldilocks, and they wanted to return to that. And their thesis was, hey, how about we just wait until the government stops overstimulating? They do whatever they need to do. Back then it was like the Build Back Better plan is supposed to really help infrastructure and really help alleviate these supply chain constraints. And we'll get back to our new normal, but with the Goldilocks. And when that didn't happen, especially after the Delta variant closed down the world again, and Biden was pressuring Powell to do something because, one, Biden's popularity was waning. Two, Powell was up for re-election as a second term by the Senate, the banking committee. On November 4th, they held a closed door meeting. A day after, Powell said inflation is no longer should be treated as transitory, and the market, or the NASDAQ, I should say, peaked. The S&P 500 actually peaked around 2 months later on January 4th this year, 2022. The big shift that we're seeing right now is that I would say the entire thesis that Wall Street worked on since 2009 until today, or until January 4th, 2022, which is low inflation and slow growth, that whole thesis is over. It's done. And so the algorithms have to figure out what is valued and at what price. I'll give you an example. My 6-year-old, I got her a new bike about a year ago, pink, beautiful, amazing, but it's too small for her. So it's in the basement and we don't do anything with it anymore. It was the prized possession, and now we literally don't do anything with it. And that's the same thing we're seeing with companies like Netflix and Facebook and PayPal and all these other companies that are down 60, 70, and 80%. It's not that they're bad companies, just like, this bike is an amazing bike, but how much value is it to me? Or how much value should we ascribe to this company if the world has changed? And so we're going through this whole reshuffling of what is of value and how much is that value. And we're moving from a growth is the premium to right now is the premium. And when I say right now, investors are looking at what's at the bottom line. I don't want a company that's losing money. I don't want something that may happen in 2 or 3 years. I want to know what I'm paying for right now. This is a lot like after the Great Depression, when value investing just emerged as a school of thought, where I don't want to pay for the future. I want to pay for right now, and I want to pay sensible prices. Anything that has to do with the future, I don't want to ascribe any value to. So we're moving into this new environment. And the thing is, Powell isn't actually doing a Paul Volcker. If this was a Paul Volcker, then CPI is 8.1, interest rates would be 8.1. But we're not seeing that. What we're seeing is a very different type of Federal Reserve. This Federal Reserve talks to the public, talks to small and mid-sized businesses, talks to Wall Street, talks to everybody. And by communicating first, even months in advance, what they want to do, either by their FOMC statements or by the dot plot. The dot plot is just a simple way they show you, hey, here's how all these governors at the Fed have voted regarding interest rates. So we know what they're thinking a year in advance. What they're trying to do is they're trying to self-fulfill a lot of the things that they need to do without actually doing them. I'll give you the prime example of this. In April 2020, when they slashed interest rates to zero and saw that it didn't help the markets, they told us that they're going to start buying junk bonds. And that was the second that the market said, okay, well, if the Fed is going to buy junk bonds, woo! And we were at all-time highs by August. In September, we learned that the Fed bought 0 junk bonds. They literally just said that they would. Just saying it changed the whole perspective of Wall Street. And so what we're seeing now is the same thing. They promised 8 or 9 interest rate hikes, or to go to 3% on the Fed fund rate, but we're just at 0.75%, and we're already seeing the Nasdaq down 30%, the Russell 2000 that is down over 30%. We're seeing the S&P 500 touching a bear market, but not quite. And obviously the Dow Jones is basically held up by Apple. So it's only down like 13 or 14%. But as you say, it's the worst year for stocks since 1939 and the worst year for bonds since 1920 in 102 years. So I think what people really need to think about is we're reshuffling. And in this reshuffle, we no longer ascribe so much value to future growth. This doesn't mean the end of growth investing. There are phenomenal growth companies. And we're assigning more value to the present. And in this whole thing, there are generational opportunities for companies that are in the basket of growth companies, but are unjustly being sold by algorithms way, way, way too much. So
there's a lot of that.
That's where we are.
Yeah, absolutely. And you know, I've said many times before, tyranny comes under the guise of convenience. And right now you mentioned the Build Back Better plan earlier on. And I would say, you know, inflation, if you go by the shadow stat numbers, is at its worst since, and this goes for like the 1970s calculations, is the worst since we've seen since July 1920, I think was the last time we saw it this high. Well, there is a lot of confusion around it because it depends on what inflation we're talking about, food inflation, what, you know, wood, gas, whatever it might be. But I know that it's up in the 20s, and that is absolutely insane. And at that rate, it's basically out of control. But I want to point out, because you mentioned Build Back Better, that of course comes originally from the World Economic Forum's like Great Reset agenda. Currently, we have 90% of countries in the world pushing for a digital currency to replace their current currency. CBDCs are on a lot of people's minds lately, and how that could affect the economy in a new era of money. We are entering both a new era for the stock market and a new era for global currencies. I want to ask you a little bit about how you feel something like a very hyper, you know, centralized digital currency would change the game going forward, as far as a lot of people are talking about social credit. In Italy, they just brought in social credit in two major cities, Bologna and Rome. There seems to be this push towards the Chinese model, not necessarily that, oh, the Chinese government's taking over the world. It's more that it's like the model that China goes by. We're seeing this massive shift into centralized digital currencies worldwide, at least a lot of the talk of such a thing at most central banks around the world. What do you think about that? Do you think we're entering into more of a digital age of money?
Well, we definitely are moving towards a lot of digitization in fintech. So governments and the private sector are both going towards that type of mentality. And when we look at what's going on right now, I can tell you that what I think is happening is we're moving towards a two-block world. There's going to be the US dollar and the countries that want to follow and use the US dollar. And at some point during this decade, the Chinese are going to try and introduce their currency as a secondary reserve currency. So instead of what we see throughout the ages where, you know, it was Portugal and then was Spain and then was France and the British and the Dutch, etc. And now the US, we're moving into a dual world where countries that like the Western world and are very dependent on the United States government, they will use the dollar, whereas Asian countries are going to flock towards the Chinese currency. This is obviously going to create pressure down on the dollar at some point. And at that particular juncture, when that crisis emerges, I do believe that that's when new ideas as radical as a Fed coin would be introduced, because these types of changes are so big, they usually occur coinciding with some sort of a currency crisis. You don't voluntarily elect to take that chance with your currency. Hey, well, let's try a Fed coin. What I think will happen is you're going to start seeing academic papers about it, and they're going to pilot it and all that kind of stuff. But a real rollout on a massive scale will take some sort of a crisis before it. And what I believe is happening is I think the yuan is being prepared for India to start accepting it, the Russians, the Arab countries of the Middle East, perhaps Australia.
Which is crazy, by the way, because considering that India and China have not had good relations over the years, but then recently we saw the Israeli government swapped a bunch out of their US dollar holdings and into yuan holdings. I mean, there's definitely a global move towards that.
Yeah, if you're asking if I had anything to do with it, with the Israeli thing, but I didn't. But I would say that Israel likes to historically not take sides, or I would say take both sides. And the Jewish people in general, because they moved around so much in Europe and throughout, they always try to stay as neutral as they can until the last minute, or to play both sides until they have to choose a side. You know what I mean? So yeah, both you know, from the conspiracy or from, you know, the side of like the Rothschilds, you know, bankrolling two sides. But in general, it's something we saw in World War I, where, you know, they were told, hey, are you pro-British or are you pro-France? And for the first 2 years of the war, you know, the Jewish leadership, you know, were neither, until they were forced to choose. And even when they were forced to choose, like real history says, they chose one and, you know, chose the other behind the scenes.
Yeah, so there's no doubt that there's a history of playing both sides from that direction, for sure.
Yes, even now with Russia and the Ukraine. I mean, it's something that it's a very politicized environment in the Middle East, and it's an art, and obviously it takes trickery when you do it at levels. But I would say, yeah, that we are moving into a world of dual reserve currencies, and you know, the yuan, they've never been a reserve currency. And if you've been to China, you know, they don't use credit cards. They use only apps to pay for everything. Like if you even go to the market to buy a bunch of tomatoes, the vendor would have like a code for you to scan. So if anyone is going to introduce that type of leapfrogging cash, it's going to be someone like the Chinese or whatnot. And it comes with their own. with its own risks. And
would you
whatnot.
see something like the special drawing rights as like at the IMF as a potential for, you know, a basket of currencies as one global digital system of money? I mean, there's a lot
Not
of
so
talk
much.
about, because the IMF is obviously pushing for the SDR to become more of a powerful tool to be used in global finance. So you don't think that's a possibility?
I mean, if it is, it's like it's very US takes the prize here, because the SDRs is mostly US dollars. So I would say it's not in the best interest of China to have this, but maybe as an intermediary, maybe if you want to swap your US dollars to yuans, maybe it has to go through the special drawing rights on some sort of a governmental level. Not for the average person, but maybe when governments do transactions with each other, there will be some sort of a third-party proxy between them. I would say for the average person living in America and, you know, saving in dollars and working in dollars, there is a chance for a real currency crisis this decade. We're seeing inflation for the first time, so it discredits the first time since the 70s, right? So it discredits the entire fabric of the US dollar, even though it's at a 20-year high. On the DXY, it was on a 20-year high right after the dot-com bubble burst in 9/11. What happened both of those times? We saw a huge sell-off in stocks and bonds. And when you sell $1 million worth of Apple stock, you get $1 million in cash. So there's a lot of demand from a technical perspective, because you have to get those dollars. We saw that in March 2020. The dollar spiked in March 2020. Why? Because everyone was selling stocks and bonds. But we saw the flip side of that. When the risk on environment came back, the dollar was sold off. Gold and silver went on a 4-month tear. July 2020 was the best month for silver since 1980. And we saw gold hitting an all-time high in August. So I think we're in a point right now where if you look at the special report I created for your listeners, for example, for your listeners and viewers, on the catalyst for gold, if you go to wealthresearchgroup.com/11 for the 11 catalysts and /2022 for the entire year's economic outlook, it includes graphs and charts that we pull together from sources that cost thousands of dollars to access. There's some proprietary stuff in there, and you'll see that there's a lot of logic on why the Fed would do a dovish pivot at some point this year to say, hey, I think we have this inflation thing under control. We haven't won the fight, but we've turned the corner. You know what I mean? It's like in battle. This is on the offensive, this is on the defensive, and at some point, the defensive are starting to go on the attack. And I think they haven't won. The battle is still raging, but it's tilting sides. And I think that's what will happen after June. They will raise rates by another 50 basis points to 125. And then they will say, I think we have this thing under control. Let's start incrementally raising by 25 basis points. And I think the markets will start to understand, hey, we live in a high inflation world. We live in a world with a lot of supply chain problems. China is probably deliberately using zero COVID policy as an excuse to save its people, but it's economic warfare, because they're shutting down major ports. And believe me, China, I mean, talk about a country that doesn't care about the health of its people. If they want to build a highway and somebody doesn't want to clear his house to build a highway, they build a highway and the house stays in the middle of the highway. I've seen that on a number of occasions. If your family was growing rice on the paddy fields for hundreds of years and they want to put a train in there, overnight, that village is gone. All that tradition, all that history is gone. So
imagine how bad their social credit is.
Oh man. Whew. I've seen the documentary on that thing. They have an entire command center. There's like gazillion screens. If somebody doesn't throw the trash in the bin, and the wind or something took that trash, and it gets an SMS like the trash didn't go in the bin. Go back there and clean it up. It's unbelievable.
Yeah.
Anyways,
but
my
you
point.
go ahead. Sorry.
I was just saying, my point is that I think the Chinese are doing this on purpose. They're trying to really constrain the supply chains and the logistics, and they're deglobalizing the world, because America is, what they're doing is they're bringing back factories. They're giving tax incentives to the big companies. They're giving them huge land deals for free or for very low prices, so they can bring back chip manufacturing and all sorts of automation and robotics into the US, so that when you live in New York City, you don't have to wait for parts or anything from China. There's going to be centers just 2 hours outside of New York City supplying New York City. Same with Chicago, same with LA. You're going to have these major hubs in the rural areas where they manufacture a lot of the things, so you don't have to wait for them to cross the oceans. And that's coming. We're deglobalizing the world, and that's happening at a rapid pace. I would even say that this pandemic, what it showed is that, hey, this was like either, hey, let's everyone come together and solve this, or let's point fingers at each other and everyone do their own thing. Sweden does one thing, this country does one thing. And that's what we saw. We saw a deglobalization in one of the biggest stress tests for globalization. It could have been like, let's harmonize everything and let's solve this all together. And it didn't happen. I think we're at the end of this era of globalization. We're moving into two blocks. And just like we saw in the 70s, the 70s is attributed a lot to the decoupling from dollars. That's what, people believe always is the reason for hyperinflation. But keep in mind, what also happened in the 70s was the previous world power, the UK, entered its worst decade in the 20th century. So similar to what's happening right now, where China is getting very strong GDP wise and army wise, and the United States it's growing, but it's losing out on these two fronts. I think you're going to see that problem emerge at some point during this decade. I'm very bullish on the U.S. economy as a whole. There's amazing things that are happening demographically and innovation wise, but we have to address that there's the free market economy, which is doing amazing, and then there's the government, which is doing the worst. It's the worst president I've ever seen.
Well, I mean, it's quite incredible that we have one day Biden will say that it's Russia's fault because of due to like inflation's Russia's fault, and then the next day he'll say, oh well, actually we just need to tax rich people more to stop inflation. I mean, it's so economically corrupt, so economically illiterate that it's mind-blowing. And even some of the most far leftist celebrities and billionaires out there, Jeff Bezos just came out and criticized Biden the other day for talking about inflation being a problem with the rich. I mean, the rich, first of all, yes, we do see a lot more billionaires these days, and that is possibly generally because of inflation, that those billionaires were 100 millionaires 50 years ago, but nonetheless it's not because of them. That is just the after effect of inflation. But look, I mean, you mentioned kind of the fractioning off of society, and I do see it kind of as like, instead of a tale of two cities, it's a tale of two worlds at this point. We're seeing a very polarized, divided world, and all the while, there's such thing as order out of chaos. Obviously, we are seeing this massive supply chain issue happen before our eyes. And I wanted to hear your thoughts on how it affects the markets overall, because we are seeing the baby formula crisis, which I think is manufactured. I mean, in Mexico here, all the same baby formulas from the same factories in the United States are stocking all the shelves here, just like I saw toilet paper stocked on all the shelves here in Mexico from the same U.S. companies, while no one had it in the United States. I could go back to the idea of Puerto Rico back during the hurricane, how they had warehouses full of goods that they could have brought to the people, but they said, oh, we could play political points with this and blame Trump for these, the lack of food on the shelves. The supply chain issue is being seen absolutely everywhere in the world. However, we see the ports by Shanghai are just absolutely packed. We've never seen it before like this. And on top of inflation, having a lack of meat, a lack of fruits and vegetables, a lack of supplies, how important do you think this issue is, and how will it affect the fundamentals of the stock market going forward? It feels like it's going to totally shift into a new world here.
Yeah, it's definitely already affecting it. So what the Fed is feeling so helpless because the government isn't doing anything. In America, we have 2,000 ports, but two ports, Long Beach and Los Angeles, handle 40% of the imports. So it's unbelievable. Now, if another administration was in charge, there would be so much innovation, so many new regulations that ease how you would handle this. There will be tax incentives to become a trucker or a forklift worker. There will be government training. There will be so many things that we can do. There are laws from 100 years ago on how to accept a ship into the United States and how cumbersome that thing is. The ports, if you research and just Google world ranking of ports by innovation, you will see that the Los Angeles and Long Beach ports rank 323 in the world, below Tanzania. I mean, union workers are obviously doing what they want over there. They're not going to work 24/7. They're not going to do night shift. There are all sorts of problems that I've seen for months. And, you know, it comes down to lack of innovation from the government. So the Fed literally saying, look, what we can do is influence Josh's behavior. Like if we raise interest rate, maybe Josh doesn't want to buy a home because the mortgage payment is too much. But here's the problem with that. Josh is still going to need to rent, and houses are still in a shortage. So the problem is not to raise interest rates so you kill the mortgage industry, which employs thousands of workers, you know, directly and indirectly. The best thing you can do is open up new lots for construction. And because we have a 2 million shortage of homes in America, but you need the government for that. The Fed doesn't do that. The Fed doesn't call the governor and say, hey, governor, what are your land banks? And let's start, you know, talking about, you know, new cities, new projects, new neighborhoods. So the Fed is very much constrained with what they can do. What the Fed is doing is basically killing the wealth effect. If you're a retiree or a working person and you had $1 million in the NASDAQ and the S&P 500 in January 1st, you now have $700,000. So maybe that vacation is not happening. Maybe that new car is not happening. The vacation, it's killing that wealth effect. But again, is that good? Is that what we want? Do we want people to just be poor? No, we want supply and demand to meet and balance each other. You cannot have 11 million job openings and 6 million applicants. You need to bring those things into alignment, and that's way more the government's role than the Federal Reserve. So the Federal Reserve, it's doing what it needs to do, but it tells the government and it tells Wall Street all the time, we don't want to do too much because it will cause a recession, and we don't want that. So that delicate balance is what the market is adjusting for. So if you're asking me, like, what are the problems that supply chains will do? I think supply chains are going to stay for another year or two. You need a new solution. You're not going back to that old world where everything worked. We call it JIT, just in time. You order, we have warehouses now. Usually, before the pandemic, a restaurant would not have stocked fridges. They would have just the fish for that same day. Tomorrow you'll get fresh fish. And same with all these other companies, Target and Walmart. But now we see them, buying in bulk because they can't rely on the supply chains. So it's creating a whole new industry in warehousing and logistics and whatnot. I think that we're moving into a world where every country is becoming way more independent, and it's trying to really unravel this complex situation. There's amazing documentaries on how products are shipped around the world, how like a drug that you buy in the United States, how it's packaged in China and moves to Amsterdam, it goes to labeling in Italy, it goes from there to the Caymans. It's unbelievable. Mm-hmm. So instead of that, we need a far simpler system that doesn't rely on so many jurisdictions, because now we see that all these jurisdictions may not play ball.
Well, I do think that one thing a lot of people would be concerned by, however, is that this leads to a lot of the people that shouldn't have as much power as they do gaining more power via convenience. For example, putting the supply chain on a blockchain, essentially. It's what the World Economic Forum has been saying. You'll own nothing and you'll be happy, but hey, we'll have food rationing and we'll do all this kind of stuff. Because it'll be more convenient for you. And that is in their own manifesto, essentially, is that they want to create a world where everything is monitored, tracked, traced, automated, and essentially there will be food rationing, but no one will ever have to struggle for food. They'll just be given food, but it's only going to be a certain amount. Now, whether that happens or not is another thing, but that is what the World Economic Forum has been talking about at Davos for a couple of years now. So I think it's worth pointing out that we need to call for a solution that comes from, a more of an individualist standpoint, a way for us to have a more decentralized but more efficient global supply chain, and also bring it more back to the local, kind of place. Here in Mexico, when the lockdowns happened, there wasn't as much panic because everyone, including, and I mean, like prostitutes, were going into the mountains to work in farms. I mean, it was a pretty amazing thing to see. I mean, there were people just lined up on the beaches fishing for their family. Well,
Wow.
in the U.S., there's a bunch of regulations. You can't do that. You're not allowed. Well, over here, they did it, and they would catch fish, and then they'd catch a couple fish, give one away to another family. The supply chain
Nice.
was rooted where we stood. Whereas so many other places, they'd never seen shelves empty. So they panicked and bought 50 pounds of toilet paper that they're still going through, and they will be for the next 10 years. So, I mean, there's like two ways that this could go. And I really hope that it comes down more to the individualist point and not falling into that whole agenda of the World Economic Forum, because I mean, yeah, sure, everyone will get everything and it'll be convenient, but at what cost? And I think there is likely a very large cost to that. But Lior,
Can I say something about that?
Yeah, absolutely, go for it.
I think what we've seen in the past 2 years is we've seen everybody now involved in government. Like before that, people were not, interested in politics, but the vaccine was such a big topic that everyone got involved. And I think that's really good, actually. Everyone is now way more involved in the discussion about everything, whereas people were indifferent sometimes to things that are going on and are beyond their control, but now they've raised their voices. They've also seen how political theater happens with masks and with everything, right? So they're much less naive about how government operates.
Right.
So that's one thing. I do think that the Davos eccentrics, I think that they make up less than 5% of the population. I do not see any world where they introduce their ideas and somebody, more than 5 out of 100 or 1 in 20 thinks that that's a good idea. And this is according to polls and surveys. So the world, even though it seems woke, or what I mean, like they'll accept security over freedom and whatnot, and let overlords run the economy and whatnot. On the ground level, I mean, we're seeing a lot of people understanding that that's not what you want to see. You don't need government to do that, because people now understand that government is human. Government is not a know-all type of monarchy, like back in, with your DNA from 300 years ago. These are real people. They have problems. They get fired. They quit because of pressure of their own jobs, and people understand that, and they know this now. So I do think actually we're in a better place in terms of how people are not as naive as they were before about agendas that are problem, reaction, solution.
I would generally agree. I would say that while that's a good positive outlook, one could also say, well, look at Soviet Russia. The narrative collapsed by the third starvation in the late 1920s, but then no one actually did anything until 1991 after the 12th starvation. The fact that people are generally against something doesn't necessarily mean that they are going to stand up to that thing. I mean, most people tend to wander and follow rather than lead, as we've seen over the last few years. So, I mean, most people were against vaccine passes worldwide. The vast majority of people, in fact, about 50% of people worldwide never got it. But with that said, you know, they still got away in most countries in the world with like absolutely crazy Orwellian dystopian rules and restrictions that are now kind of teetering off. But it lasted long enough that it scared a lot of people who were against that narrative into going and getting it because they thought that their family wouldn't talk to them again, they couldn't work, etc., couldn't go to the store. So, I mean, I think it's, again, like you said earlier, it's basically fractioning off the world. So there's a tale of two worlds here. There's a compliant, and then there's the vocally opposed, I suppose. And the world's going in two different directions, and there's good and bad to it. I am honored to live in this point in history because most people read history books and we're writing them. So there's definitely a very big upside to that. And like I've always said, we'll see where it goes. I don't know. I can't predict next week, never mind a year from now. So we hope for the best and that that good overcomes evil in this case. But Lior, I really appreciate you joining us today. I want you to let everyone know where they can find more information, get involved with Wealth Research Group, because I know you guys put out amazing work. I've been following for many years, and it's been helping a lot of people navigate these very unsteady waters of the last, 10 years or so. So can you let everyone know where they can go support the work and what they can find on Wealth Research Group?
Sure. So I would say four things. We just put out four amazing new research reports. One is about a possible crypto winter. So if you go to wealthresearchgroup.com/crypto, I think you'll be very interested in why it could be a very bearish few years ahead for crypto if you download that report. On the flip side, what we talked about, like buying dip heavily, I found four companies that I'm personally gonna, I've already invested in, but I'm gonna accumulate way more shares. And you can look at those those companies at wealthresearchgroup.com/high, like high growth, HIGH. I talked about the gold catalyst at wealthresearchgroup.com/11. And the general newsletter is where you get the most up-to-date things and just follow everything that I'm doing with my own insights. And that you can go to the website and just subscribe to the free newsletter.
Excellent. Well, I really appreciate you joining us. Of course, you are on the other side of the world, so it's I'm sure you're ready to go to bed. So it's morning here, it's nighttime there. It's crazy. But anyway, I appreciate you going into all this with us. Very insightful as always. I hope to have you on again sometime soon. And I ask everyone watching, go and check those links below in the description of this video. Get involved, research, do your own research, my friends, as always. And of course, we are now on Spotify. So go and find us on Spotify, World Alternative Media. We'll see how long we last on there. And anyway, I appreciate everyone watching today. And until next time, this is Josh Sigurdson with Lior Gantz signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.